Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. This is the Real Estate Risk Report. I am your host, Lance Pederson. So today I have with me Spencer Hilligoss with Madison Investing. How you doing, Spencer?
Doing great, Lance. Really a big fan. Excited to be here.
Yeah, thanks for joining us, man. Yeah, so I've seen Spencer on LinkedIn. He posts some interesting stuff. We invited him on. It seems like good match, and how he kind of views the world and investing, and even before we hit record, right? Just realizing that we're sort of in sync in that regard. So super excited about this particular episode. But before we get to it, why don't you just share with us a little bit about your background? I know you've had an entrepreneurial sort of bent. I mean, you're kind of from the, and at least lived in that neck of the woods where, the Bay Area and those sorts of things. So you've seen a lot throughout your career, but maybe share with us how you kind of, got to today, to where you guys decided to launch Madison Investing and you got into this sort of alt space and real estate in particular.
Yeah, happy to. And thank you for the tee up, Lance. I think, I live on the Bay Area, California, so my primary career for 13 years was really in tech companies, like so many other folks out here that are in the local business, quote unquote. And I mean, the irony is, I have been now told by so many folks in this real estate business that I should tell you what I'm about to tell you up front, because I used to be kind of embarrassed about it, frankly. I grew up in a real estate household, and my dad was a residential broker for 30 years. And so technically, I guess my introduction to the real estate world was at the ripe old age of 6. I was there's photos of me on vacant plots of land he's trying to sell. As a teenager, he had me work in open houses. I really did not enjoy that. I hated that stuff, man. I mean, it sounds like it's probably not that bad, and frankly, it probably wasn't. And I learned a lot throughout that journey. Role modeling imprints on us early, and so watching an entrepreneur in the form of my dad build that business made a mark. But I also watched what happened, as a guy who's sitting here now on the other side of a 13-year tech career with my own kids. I think back to what I witnessed in his own career arc, because this is a story that plays out with real time in real people's lives right now. This is really brief, but worthwhile for the audience. He was an active broker, and we had an extraordinarily strong family income and lifestyle for many years. And so then we hit a decade of pain and tragedy, man. It was just, I lost a younger brother to cancer. My parents got divorced. My dad's business crumbled, all this other stuff. And it came back eventually. But why does all that matter? And why are we going 0 to 60 on that real quick? It's because I think a lot of folks in the working world, W-2 wise, just like I was for 13 years, they think they're crushing it. They think they've got a great financial plan, and they think they've got it all figured out. In reality, dumping all that money into 401ks doesn't mean you could touch any of it for decades. And particularly if you're not going to see your kids because you're working too many hours, just like I was, doesn't really seem like a great plan. There's no exit strategy from that. My exit strategy for years, literally, maybe I didn't say this out loud, but I was working on this plan, was like, hey, if I have these 5 companies I join, if one of them lands, means I get equity early stage enough and it becomes the next Google, Facebook, Uber, that'll absolve all of my financial sins along the way. And so suddenly, you get a big exit and you're able to go and just live this whole new lifestyle. That doesn't happen really for many people. It's a minuscule amount of people that actually hit that. And so once I realized I wasn't spending any time with my young kids, and I was working 80 to 100 hours a week in a very, very hot, quote unquote, tech company that's probably is going to, fingers crossed, have a huge exit. I knew there was a change to be had. And I stumbled my way into a company called Lending Home, which is now the biggest fix and flip lender in the country. So I built their loan origination teams. And I'm very proud of that work. That was over 3.5 years. So by day, I got a boot camp on what investing meant. And I saw all the zeros that the investing side, the investors were getting. I didn't want to become a flipper. I can barely swing a hammer. YouTube saves me every day in my own household.
Right.
But at night, I was very attracted to the stability, predictability of all this passive investing, passive income stuff that came with bigger deals, apartment deals, storage deals and stuff. So we just started as LPs. We bought a local rental. We stumbled our way through all the the quintessential, early stage passive income investors do. I bought a local duplex. We bought some turnkeys in the Midwest, turnkey single family rentals. I literally sold those last week, by the way, 5 of them.
Congratulations.
Thank you. I'm so happy to be out of single family rentals. I know single family is supposed to be hot and it's going to get hotter in the next 2 years. So maybe I'm an idiot for that. But hey, I don't have the administrative headache of semi-passive investing in rentals anymore. So here we are now, trying to apply all those learnings from 13-year career to help the many brethren of mine that are still stuck within that Silicon Valley machine, thinking that a $300,000 a year or more job is their ticket to more autonomy in their life and spending more time with their kids. And, we're helping a lot of people right now in that way, helping them find investment vehicles that are better for their plan. And so it's a pleasure. It's a blissful way to work. I work incredibly hard still because I actually enjoy it.
Exactly. It's rewarding, and it's worth it. And I think we hit on this a lot in a bunch of these episodes, right? It's like I call it conviction, but it's like you develop this conviction now. You're like, oh, I realized, over time, like that's not the way. Like that's not the winning formula. So I can't, now that I know it, now that you have the truth, it's like you got to do something about it. But then it becomes this desire, like I can't let other people keep doing this.
Yes.
Right. It sounds like that's kind of what drove you. So now that you're like, you had this truth and you realize like, man, that's not it. That's not it. This is it. Because I'm asking this question because even for me, like now I've been in the game for so long, it's like 2008. I mean, it's just feels like 5 minutes, but it's been a long time now. And so it's hard to recall what it's like to not know. And that's kind of why I do this show. Like I try to go there. I try to remember what it was like to be ignorant, right? To not know. And what are those things that people need to know? Because but for you now, since you're now at that center where because I view it like your role it's to create converts, right? It's for people to realize that, okay, that job, or you chasing the tech dream, which once again, if you pan out and just think about it, it kind of looks more like gambling than anything.
That's
like
right.
It's nuts, right? And so, the chances of it happening are very slim. It just, the odds aren't that great.
Yes.
And it leads to a lot of disappointment. And obviously, you're young, like I'm the same way, like, you can take those chances, you learn those lessons, you can get back up. But so for you, what do you find? Like, how are people reacting? So when you see someone they're in the shoes that used to be, like, how do you walk them through that? Like, how do you get them to realize, like, man, take some of this income, you need to put it over here, right? Like you said, you got the 401k and whatever, it's untouchable. You convert it to IRA. That's obviously a strategy, but you've got some of this other stuff. Like, one, start saving, stop spending it all, right? And then two, go put over here to create another income stream that runs alongside your W-2. What does that look like? How does that conversation go?
Gosh, this in and of itself could be a book, right? So I think first and foremost, just to package it in a nice bow, because I've had to reflect a lot on how do I make this communicable? That's the hard part. That's why this is so prickly and hard for other people to wrap their heads around, because real estate, it has many acronyms. I mean, like many other prickly industries does, right? Financial offense and financial defense are kind of the branding that I put around it just to make it more communicable. And frankly, kind of how we talk about it in our own household now. Like how do we truly play financial offense and financial defense for our own household and life? Because then if we can dial that in correctly, and if we can, mitigate that risk, right, of job loss, of some, when we got a big pandemic going right now, it's a big black swan event happening right now. So a lot of people, unfortunately, are facing these realities real time. But that's how we think about it. Is so financial offense. What that really means to me is quantity and quality of income streams. And getting more of them. And it sounds so basic, but like, frankly, that is now how I define volatility. I'm not the guy who myopically goes out, by the way, Lance, and says, dump all your stocks, go all in on real estate. Because not only is that awful advice, it is misrepresenting the narrative that you, and I'm not going to speak for you, but I think that we generally, those of us that have kind of seen the light on what's possible for cash flow, and how you can get cash flow investing coming into your life and creating more passive income streams. That's what we're going for. We're going for adding income streams. You can build them or you can buy them. That's it. I mean, side hustles, you can build them. It does take your time. So people who work full time can't necessarily go grind unless they have found that spark and they want to go spend those hours between, either the day job email hours or when the kids go to bed at night from like 8 to 1 a.m. Maybe they can go build a new income stream. Most people do have to buy them. By buying them, that means you have to go invest in stuff that produces cash flow coming back into your household. And so that's kind of how we think about it and how I try to communicate that to people at first. Usually that's a little bit much for them, even like just takes time, right? Like it takes time to get out of that heavily conditioned mindset of like, I'm just going to go work my job, do the best I can, get my 2 to 3% raise on an annual basis if I do a good enough job. And I'll get that over the course of 20 to 30 years until I'm done. And then I've succeeded. The challenge is, I just speak from experience on this. You can't use anything you're dumping into that 401k without getting hit with a 10% penalty for 2 to 3 decades. I'm 37 as I sit here right now. I'm happy to share that with people. That means that I'm young in the big picture. I am an ancient dinosaur in the tech picture.
Yeah.
And so that might be heartbreaking for some folks that are outside the Silicon Valley scene. That's just a fact of how you're perceived. And so I am no longer the new guy. And what that means, just for folks briefly on the financial offense front, is like figuring out how do you go and reallocate dollars, just like you hit on, Lance, without dumping it into consumer stuff. You kind of just have to deal with that right out the gates. Like, at least stop spending on stuff you don't need. Like, I'm not saying don't buy stuff. I bought my first guitar in 10 years recently. I love playing guitar. So it's okay to have fun.
Yeah.
But stop buying stuff that you truly, truly don't need. And then I also just wanted to mention briefly that going and opening your mind a bit around what it means to look at alternative assets. I think that is the most loaded, branded term from Wall Street that has been ever put out there. And calling real estate an alternative asset is a distancing term. And alternative assets comprise a very significant chunk of our own portfolio, way more than the typical financial advisor would usually recommend. And so it's just stuff like that you slowly got to get over. But I have to say this, it's a little bit contrarian. It's absolutely going to irritate some people out there, in which case they can happily go work with another investment partner. The biggest defense and barrier of helping people convert, as you mentioned earlier, Lance, like if they are crushing it and they're at Facebook or Netflix or Google or Salesforce, like many of our investors are from now, the first reaction is typically, well, to get in these companies, you have to have academic pedigree. You have to be a badass. You usually come from Harvard, Stanford, Yale, Princeton, top 5 Ivy League. You're used to being right. Yeah. I went to Boulder, Lance. I snowboarded a lot. I also know that, I forget what business leader came up with this phrase, but I love it. And I always have a chip on my shoulder about it. In companies, top 5 Fortune 500 companies, what do they say? A students manage B students, C students run the company. You got to get there first with them. So as soon as they stop thinking they're always right and how could they possibly have been wrong for so long, then and only then are they ready to have a conversation with you.
That's exactly right. And that's a huge barrier, like you're saying. And that's why I bring it up, because that's what you're up against. And and to your point, even with those kind of people that are sort of your tribe, or the people you're trying to convert, even more so, like you said, they're used to always being right. They're not. They think they're open-minded, and they're not. And it's a mindset shift. I think the cool thing that's happening though, even with the whole Robinhood thing and the crazy, but what's happened is that I think that people are starting to realize that American dream is no longer the American dream. So
right.
there is this shift that's taking place. In fact, they said the number of people now that are seeking out financial education is just off the charts compared to what it was. So that means that the jig is up. It's happening where people are realizing that, oh my gosh, the thing I thought was going to save me isn't. This isn't going to work. Of course, hindsight's 2020. It's pretty easy to look back and go, yeah, what happened? They were all pensioners. Then we shifted this other model. So then all they knew is that their parents weren't sweating it. They just kept punching the clock. So then they did the same, but then they were left on their own. But then, then the American dream, deluded them into, I need stuff, consumerism. I need boats, and I need this, and I need to go on vacations, and I need to do all these things. Right. And then meanwhile, it's oops, the part we forgot to do was save. Right now, it's oh crap, we didn't save. Not to mention we've gotten basically slapped in the face and kicked down and punched, two times in the last 20 years, right? Like where they're like, everyone took this hit. And then the millennials, right? When you think about them, they were in a position where they went to college, they got out of college, and they're like, no job, sorry. Like you're basically sidelined. So now they're just wandering around or doing whatever. I mean, they're trying, right? But so now everyone's, then the Robin Hood thing came out and everyone, all the young people are trading stocks. And so now it's like, and the sports was on a hiatus. So then all of a sudden Wall Street became the casino, right? They're all, it's just like, oh, we can't bet on sports. So let's just bet on the stock market. But it's created this moment. We're at that moment, like right now, where everyone's realizing, oh my gosh, I'm in control of this. This is a me problem. This is my money. This is my life. Oh crap. I got to do something about it. But oh crap, I'm ignorant. I don't know anything. I can't, the advisor I hired or whoever the wealth, whatever it is that I thought I was doing, I'm just treading water and going backwards. I mean, I just read this email today from Eric Satz with Alto IRA, right? And he's basically saying that like, this is same thing. He's going, people are realizing, that they're in control of this now, right? That they've got to do something about it. And that if they do it the old way, and to your point, I mean, it's a portfolio. You've got your own dreams and goals and visions and things you want to do. It is contextual, right? And then you get older and things happen, like I said. So you always have to be assessing like, what's my portfolio? What should be doing? And your portfolio has problems, whether you realize it or not, problems that need to have solutions. Like right now, we've got a big problem. Like, how do you get income, to your point? Like that in particular, it's always a good idea to generate cash flow or income. But right now we're in this really weird spot where there's like zero or negative interest rates, right? And we're going to be fighting inflation. And so it's harder to like, where do we put this money, right? To beat inflation, and there's no income. The bond market's upside down, everything like, so everyone's sitting there going, oh crap, there is no instrument, no product on the shelf that's readily accessible to plug in to get income.
Yes.
Right. And now you see this is why, like, I know in our show, sometimes it can be like, it feels, I mean, all I got these multifamily syndicators on, and obviously I'm trying to create like diversity, but there's a reason why, because people are going, shelter, rental income, people have to pay it. We're becoming a nation of renters is the other trend, right? In fact, I mean, we're becoming the nation of rent everything. That's what the gig economy stands for. It's like,
completely.
You don't need all that crap. Your house, you think it's an investment, not really an investment. Cars certainly have never been an investment, all those things. So it's like the light bulbs are going off. So now everyone's having to confront this and realize, oh my gosh, what do I do? And this is why I love it. Because guys like you, see, to me, you're a door opener. You're opening doors for people. You're creating a gateway in to the opportunity. Because that's the part that when you think about it, that's the part that's been missing. How in the world do you access it?
Accessibility. Yes. Accessibility.
That's the key. So, which is great. I mean, it's kind of cool because it's like, you think about it. I mean, in my life, I'm 42 going on 43. And I'll be honest, like there's periods of time where I kind of felt sorry for them. I'm like, I kind of feel like, same thing. We all like, I missed all the waves, right? Like I was too young to take the Silicon Valley wave. I was too young to whatever. Then this thing happened. It's kind of like, woe is me. I missed all the windows, right? But of late, I'm telling you, I'm like, it's like all humans, we tend to, we're a little bit oblivious, right? It's like, you're going to be here a long time. You'll be able to catch your wave, like keep paddling. It'll come. But it's like right now, man, the wave is now, right? We're on the wave. Like it's freaking cool. It's cool that they left this little plot of land that is called real estate or whatever. And it really just was sort of like frozen in time. I mean, as far as I'm concerned, it was. Right. And now it's like, man, we get to do this. Like we get to play. Like, and that's why I get so excited. So what do you think about all that? Is that kind of where you're looking at it too?
Oh my God. If you want to get me fired up, just say all that again, I mean, it was so many topics we can go into that that get me fired up. I will say that like the language, the way it's so accessibility, let's talk about accessibility some more. I think that the way so take Wall Street. I'm overgeneralizing clearly. Wall Street meaning the equities markets, stocks, and bonds, where most people have a little bit more of a comfort zone, because they've been conditioned to. But then you've also got everything else. whether it's hard assets, just hard assets as an example. You got multifamily apartment buildings, you have single family rentals, you have precious metals, you have all these things. And the language itself has not been set up in the favor of the average person. Like it's really distancing. I mean, take a great example of trying to go and self-direct your retirement account. Good Lord, that is a very, very confusing space to get into. Mm-hmm. But as a guy who has now invested, I used to have 4 separate 401ks, no joke, 4 separate 401ks. That's what happens when you work on tech. You have short runs, and I had 4 separate 401ks. Initially, I rolled all of those into a Vanguard IRA, and then just very shortly after, I kind of woke up to the real estate thing. And I realized, wait a sec, like I can take all that stuff that's sitting in a bunch of big, solid enough blue chip companies in some cases, but some of which I don't agree with necessarily what they do. I want to go take more control. I put that over into a self-directed account, and to be specific and accurate on here, it's a solo 401k. It's my own account I'm talking about here. Yeah. And I've now invested in like 5 syndication deals and also bought precious metals within that account. And so that's some stuff that took a lot of really focused education and me nerding out way more than the average person is ever going to want to or plan to. And so how the hell do we bridge that motivation, time, curiosity, and appetite that I found, which I don't expect or want to place on others, to just bring it to the average person?
Yeah.
And it is not only possible, but I think you nailed it about this moment, Lance, like without being dramatic. I mean, I think people, some folks who might be tuning in and hearing this for the first time might be going like, wow, these guys are really like saying like, this is some kind of moment. I got to get off my butt and go do this right now. Truth be told, I don't think people need to rush out and suddenly dump all their funds from one other place. I hope they don't.
No, please do not do that.
Yeah. Please, good Lord, do not do that. But I think the message here is just realize, gosh, I don't know who I can give credit for. I can't remember who I heard this from. It was a wonderful quote. And I think it hits at the core of the dilemma for the average investor, which is we all think that we should be doing our own taxes, but paying someone else to manage our wealth for us, when it's the opposite. We should be doing our own wealth management, and we should be paying someone else to do our tax advisory. And I don't use TurboTax. I used to, my first big career move was at Intuit, the company that makes TurboTax. I was there for 5 years. And then I went to 2 other companies that are competitors of that company. So I was in fintech, accounting, and payroll taxes stuff for most of that 13 years. Yeah. So, and I'm the guy sitting here saying, I don't do my own taxes. And I wish I had switched to doing it earlier. So this is the stuff that people it's like completely flipped. Like people are more willing to go part with a percent or two of their total portfolio wealth to a financial advisor to be spoon-fed a strategy. And that is the biggest kind of misnomer. They got to just, I'm sorry if this scares them or alarms them, but yeah, you should get to the point where you don't need the wealth manager, frankly. If you can do that, then you're on the right track.
Yeah. And I agree with that, and I think that's, and I know a lot of guys for wealth managers. I mean, this is where some of this stuff, just yesterday I was talking to a buddy of mine, a prospect client, whatever. I mean, it's the same thing. He's just going like, he's trying to do his job, right? Like that's just it. He's saying the same thing. Like, this is tough, man, because I know he's seen the light now and he's going, I'm in this position.
Right.
How do I solve this problem? And he's sitting there going to me, he said the same thing. He's going, Lance, build it, buy it. Because the conversation is, he's like, I need to solve this income thing. It's a problem. And now I'm feeling compelled, and he engaged me to be his fund architect to figure out is there a way that he could put together a vehicle that solves that problem?
Yes.
Right. By going into, by making allocations into a series of debt funds to create, once again, because he's been taught traditionally, right, as to how you you balance a portfolio and diversification and all those things, right? And he's like, what do I do? He's like, and he's sitting there going, man, it's a lot of work. It's hard, and I'm like, he's like, but is there something I'm missing? That's what he's saying. Like, am I missing something? Is there some place I can go buy this? Like, right. Is there something else so I don't need to do this? And I'm like, I hate to break it to you, man. Like, there's not. Right. And if there was, see, you won't be satisfied, because now that you're not going to like what they're going to do.
Right.
Because that's the stuff under the hood. You're not going to like how they build that portfolio, because they're going to be all about like, how do we make it blow up and go to gazillion dollars and it's some interval fund or whatever. I mean, I'm not knocking that stuff. I'm just saying that's just the reality of it.
Yes.
And it's not going to be what you want. It's not going to be pure. It's going to be so further removed. It's going to be so watered down, right? Like that's part of the issue, right? And so it is a bit of this. I mean, I feel bad for those guys. The guys who end up seeing it, most of them are clueless, right? So they're just like, they don't even want to go there because, I mean, and I get it. It's like, if they adopt that truth, then they're in this guy's position who's then thinking, man, what do I do now? Right.
Right.
Now what do I do? And it's like, yeah, I mean, because if you want to do right by your clients, and I think this is all that to say is that there's a new breed, there's a replacement, there's a hybrid, there's a whatever. It's people who are educating first, like Madison Investing in you guys, and you figure out a way. Once again, it's about, I'm training you, I'm teaching you, I'm opening your mind. You got these things, and I'm opening doors into product. Yeah. Yes. And you're going to use a mechanism like you guys do as an example, like to where, there's multiple ways to compensate. I guess that's the point, right? Like at the end of the day, it doesn't matter how it is within whatever regulatory framework it is. There's multiple ways to skin this cat, but it all looks the same. And it's about, let me help you understand what you need to know to ostensibly do it on your own.
Yes.
Right? And then we'll add value to open doors, meaning creating access points in. And now you have the wherewithal to make your own decisions. I'm not your advisor, once again, because if you trip over all these regulatory things, I'm not going to tell you what to do. I'm going to tell you how to do it. And I'm going to give you some stuff that you can go pick off the shelf to solve your problem. Right. Would you agree? I mean, like that's the new way. That's what's happening. Like specifically say, hey, there's a shift, but I'm saying the mechanics and the boots on, like how does it look? It looks like that.
And I think, do I agree with that? I think, two things came to mind that I want to hit on there too. And this just happened 2 days ago. So every week I might talk to a new member of our passive investing program that somehow finds out about us and reaches out through our website. And in this case, this was one of the more lively discussions because we have a prospective investor has gotten to know me over a course of almost like 2 years now. Facebook employee. Everyone here will remain anonymous for the sake of both ego as far as my sanity. Yeah. But I would just say their financial advisor set up a call with me, and it was in the nice. I'm putting words in his mouth, but at some point he did say, "Okay, cool. I wanted to reach out just to make sure that you're not a Ponzi scheme." And good on him, right? Good on him, because if I'm a actual fiduciary, because I think if that wealth manager is his fiduciary, he's getting paid to give him financial advice, and so he's doing his job, reaching out to vet me. So good on him. He walked away from that call asking if he could invest potentially $800,000 with us, and the wealth manager did.
Yeah, exactly.
Of his own money. And so that's the kind of moment where you're like, he's sitting there going, okay, he not only is he sold because by the end of the call, he's saying, oh, I believe you, you're not a Ponzi scheme. You're like, well, yeah, no kidding. But the investor themselves is not only good, the wealth manager is sitting there going, how do I go back and actually do my job correctly? Because now, I mean, he is, I think he's part of a larger, a larger major advisory. And so they're handcuffed. I mean, they can't do full alternative asset recommendation. They can all that stuff. So it's a fascinating conundrum. But it really does start with self-education, and there is a little bootstrap component there. And I wish that there was a silver bullet way to tell people that these Brussels sprouts have to be chewed by you and only you. There is no one else who can do this for you, and you're not going to like the way it tastes if they do. Interesting timing on that one.
Yeah. And that, and that is how it is now. And it's going to, right. This is where that evolution and what we get really excited about, it's going to happen. And that's what I mean. Like for me, it's seeing, being in this long enough now to see where all those friction points are, like case in point, like with where that position that guy's in. Right. And I get it. Like at first, everyone's like, oh, investment, they're a pain in the butt, just no. But it's like, you put yourself in their shoes, it makes sense. They got to feed their family too. Yeah. The decision to do this, they got all the licensing, whatever. When you look at it, because see what's happening. Like let's dissect that call, right? One, the guy was convinced. He's going, I like your doors, I like your philosophy, I like whatever, and I feel comfortable enough. You guys aren't a Ponzi scheme, which I always tell everyone, like sponsors, especially like operators. I'm like, it's on everyone's mind, man. They're all wondering if they're about to invest in a Ponzi scheme. So it's like trying to get that out of the way. Like, we help solve that. We're an administrator. It'd be hard to run a Ponzi scheme. But the thing to keep in mind, like what you were just saying, is that for that guy now, he's got this client, who's managing his wealth. And if that guy's money goes into Spencer's deal, right, from his perspective, it's sort of held away, right? And when you think about it, like when that guy, he's paid a percentage of the total wealth that he manages on behalf, right? Yes. So when some piece of that pie goes away or goes down because it went someplace else, he now has to talk his client into the fact that he's still adding value. Yes. And that he should still be paid his fee on that percentage, right? Because you can see the conflict here is where everyone's going, well, that guy wants to take, so he'd rather not have that conversation. And if he can just talk his client out of it, like, bad idea, dumb, no one ever do that, which is what most of them do, because they're just like, let's just shut this down right now. Then he doesn't have to have that conversation, right? And so these are all the things behind the scenes that go on that sort of lead to behaviors. I mean, as humans, we just figure out what the game works, and then we protect ourselves to make sure that, we don't steer people into things. And this is the conundrum.
Yes. And we function so fundamentally on carrots and sticks, man.
Of course,
carrots and sticks that's where it starts and stops.
That's where it starts and stops. It's all about what's the incentive, right? And how that works. And so I think to that point with investors, those of you thinking about getting the game, is that's how you learn this game, is that you have to, I don't do it because you're trying to like pin people against the wall, but it's always like, follow the money, see where the compensation is. And that's what I always tell all my clients, like in the advisory sense, I'm like, whatever fees we come up with, I use put the money where the work is.
Yes.
Right? Why do I say that? I say that because then you need to be able to defend the fee. It has to be defensible. And if you can't defend it, then the fee needs to go away. Right. And then teach investors, the flip side is that go and look and find the fees. Where's the money going? And ask them to defend it. Right. Yes. Ask them to defend the fee. Right. Now, fees aren't bad. And that's the difference. See, because before that was all hidden from you. Right. That's the problem with the other side of the world, is that it's all opaque. They want you to believe it's transparent. It's not. It's all the stuff going on behind the scenes that you don't see, which is what leads to like, why am I not moving forward? Why am I just treading water? Right.
Well, and I think I know we're kind of going down what I think is a very fascinating and helpful rabbit hole, and I hope the audience thinks so too. But just tell me to shut up, or we can move on if it get too long-winded on this, Lance. The role of disclosure. I think the role of disclosure when it comes to working with investors, or if an investor is sitting there evaluating any type of thing, right? Like if they're going to go buy a single family rental, right? Here's an example. Those single family properties that we just sold after ownership for a few years, they cash flowed. It was fine. We're in the black on them. It was great. There were some hiccups and some turnover, which is part of the reason that we don't want them anymore, is because there was just too much administrative headache. It wasn't worth the time. The time is now worth more per hour than we were spending on it. And so that's a good benchmark for people just to remember in general. But what they didn't tell us at the time we bought them was the turnkeys needed somewhere between $20,000 to $30,000 collectively of additional repair to make them turnkey when we bought them.
Yeah,
that's a miss on the part of the person that sold us that product. On a syndication deal, on a private placement real estate deal, I challenge people to go out and ask the sponsors they're working with to disclose everything. And it just means like, because like, and we don't have to go too far down this, but I'll just say like, I am now, we were chatting about this, Lance, I'm a registered securities professional. So that means I ethically and legally in writing have to disclose
most definitely
everything. And if an investor doesn't understand that value in that soundbite in and of itself in mitigating the risk on the who component of their investment, they should slow down and go study more. Yeah. And so it's just something to not to go too heavy for people, but I think disclosure is key. And I want people to understand
it is. And I think that, like you said, is that for those, and once again, it's very few at this juncture, like the move that you made, Spencer, right, is very, very few people actually make that leap, at least in our neck of the woods. I mean, there's people who woke up today who do that, have been selling stocks for years or whatever, but yeah. And that is where there's a higher, when FINRA is super, super, super tight, and that's who oversees guys like you, right? And they're like, you got to disclose everything. There is a difference. Everyone's supposed to be doing it. So
Correct.
don't get us wrong. Like everyone is supposed to be disclosing these things. The issue is, to your point, is it's not all being disclosed.
Yes.
And it's the good deal exemption. If everything goes well, fine. But when it doesn't, it will be a problem once again for that issuer and that sponsor. I mean, that's when lawsuits happen, right?
Yes.
Is when it goes sideways and goes, the other direction, and that disclosure is not there. Those are the loophole. Those are the things that, once again, people that are pissed that they lost their money go after, right? And so, and that's why when you just go all the way up, is that investors, that's where the education comes. It's understand. I know that it's intimidating, because it is, but it's learning that, okay, this is how the game works. Where's the risk disclosures? Where's those things? Not getting like, oh, I hate reading and I don't want to look at the stuff, but it's like, read it and internalize it. Why is it there? What seems to be missing? What's not there? Ask those questions, become an educated consumer. But that's what's happening, is that people are becoming educated consumers. The part that now we have to fill this void and vacuum is those who are educating.
Yes.
Right? That's the thing. In order to go from ignorant to enlightened, you need to have some guides, some people who can help that. And that's where I see guys like you, right, filling in with your tribe. Like, you track a tribe. These are your people. You teach them these things. They become enlightened, and they accomplish their objectives.
Yeah. And hopefully done right, everyone wins. Everybody.
Yeah.
The rising tide does raise all ships. And I think just briefly on this topic, I think, when it comes to folks deciding we can't get through a discussion about real estate without talking about the 3-part framework for looking at deals. I do think it's still so helpful language-wise for people out there, just to mention this. Yeah. Really, it applies to any type of investment. But if you're trying to evaluate an investment, you want to look at the team, the market, and the deal or the business plan. Is the 3-part framework. And there's different language you could put around each of those, like the who, the where, and basically the what, the how, the why, all that stuff. Yep. And so as someone is evaluating those, I just want to mention this, because the percentage of people who stop short before they decide to go back into the very mainstream world of 401k index investing, and they don't decide to go and do this crazy quote unquote alternative investing thing, 9 times out of 10, that happens because they get there and they don't get this sense of absolute certainty. And it's like they're looking for the same certainty of their FDIC insured bank account.
Sure.
And that's what you're giving up in order to get that increased returns that everyone is looking at, right? And so like people just need to wrap their heads around that. There is no such thing as certainty. And so you have to just get comfortable with that, really wrestle with that, find your own manner.
They call it a T-bill, I think. It's as close as you can get.
Yeah, that's right. That's right. But it's just a shame that so many folks get to that point, and unfortunately they never pull the trigger, because they're looking for they start using the words like, am I guaranteed, blah blah. Yeah, and I'm like, whoa, like hit the brakes, pull that from your vernacular. Right. You're in the investing world now. Right. Yeah. So anyways.
And then, by the way, you live in a world where there is no guarantee in anything. That's why I tell people, that's why I like the word risk, because I call it is risk. It's risk. The more risk you take on, the more you should be rewarded. You stepped out of your house today. You took risk. You went into the bathroom. You took a shower. You took a risk. Every little movement you make, there's inherent some amount of risk that something could go wrong. Right. And that's why you have to understand how these things work if you're going to make an investment, so that you can appreciate whether or not you will be compensated appropriately for the risk that you take. And then risk aversion goes up the other side. Some of us are more comfortable with taking on more risk. Some of us are more risk averse. In many ways, it's a personality thing, right? And it's going to guide you, right? Like I'm okay with risk, but it doesn't mean that I'm okay taking calculated risk. It doesn't mean that I'm reckless.
Yes,
it means that I do think about it. I'm well aware of what could go wrong, and I'm willing to accept that. So when it does happen, you're not going to see me being a guy who's disappointed. I knew the risk. That's why I don't gamble. I don't like it. Like I'm fine with risk. It's too risky. It's just like throwing my money away. I don't want to do that.
Yeah.
Right? But it's not that gambling's bad. Like I don't care. Like do what you want to do. It's just not my thing.
And those rules apply in investments and finance. But it's interesting is people are far more risk open on other aspects of their life. Seatbelts do not have a 100% effectiveness rate. I mean, people still drive to work. So it's fascinating to me. And I think you absolutely nailed it, Lance.
Yeah, this is good stuff. Well, I'll let you go. So why don't you tell us, where can people find you?
Yeah. So we actually launched a new website beginning of January. We're super proud of it. MadisonInvesting.com. People can just go and create a profile on there for free. Start receiving my newsletters on a monthly basis. And also, Lance, you and I were chatting about this. I am a daily poster on LinkedIn. So you can read my internet rantings. If you go to LinkedIn, I promise if you try to connect, I will not bite. I've been pretty preachy today, but I'm a very friendly guy. So I promise, just reach out.
All right. Thanks so much, Spencer. This has been a lot of fun. Appreciate your time.
Yeah. Thank you, Lance.
All right. Take care.